Hi, and welcome back to the 2020 Economic Recession and Preparation channel. Well, it seems that today is October 31st, 2019, and we have a lot going on. It seems that the markets have reacted somewhat positively to the rate cut that the Federal Reserve Chairman Powell has issued of 25 basis points that the market so desperately needed. But all is not well with the markets. Even with an interest rate cut today, this is the third rate cut, by the way, in the last couple of months here, the markets are still sheepishly timid and down. And everybody's wondering what is going to be the next move. As a matter of fact, Fed Chairman Jerome Powell mentioned that he will now, and him and his team will now watch the economy to decide the future moves, quote unquote, as they expect a lot of volatility to happen in the year 2020 with these markets. Well, first of all, we all can expect that, because if everything was okay, we wouldn't be cutting the interest rates down to where they're at now, somewhere between 1.5 and 1.75% as the Fed funds rate been lowered. Okay, and keep in mind that the bank repo by the Fed, the balance sheet is already at $2.5 trillion. The bank repo operations are continuing at least until November 22nd, according to the Federal Reserve. That's where they been injecting up to $80 billion cash liquidity in these banks. These are interbank loans, but loans between banks. So we have to wonder if there isn't going to be another cut before the year is out, if we can even make it through the holiday season. And so this is what we're looking at. BBC.com is reporting that the global economic slowdown in the third quarter has slowed to 1.9%. That's the GDP growth, okay? Now, that's still ahead of the 1.6% that was predicted. And they also said that consumer spending held up better than expected, quote unquote. Now, of course, we know that that's offset by bad in business investment, meaning that businesses are not spending capital, reinvesting capital back into their businesses, or paying the employees higher wages. And that's also offset by negative manufacturing PMI numbers from not just the United States, but from Europe, China, Russia, etc. Okay, so and we also keep in mind that this trade war, this conflict with China, also hasn't played out to a steady deal of any sort whatsoever. So that all spells out that this economy will be heading towards a recession, but probably later than most estimates think. Most estimates right now, we have it at fourth quarter 2020 or beginning of 2021, pretty much likely, that a recession will hit. A global recession will hit, but more so the recession in the United States is going to hit before then. And that's not counting the Brexit deal that has not really been going through as well. Third quarter economic growth slows down to 1.9%. Okay, and here's the thing, folks. We don't have a manufacturing sector, okay, and whatsoever, or a farming sector. Farming is critical for survival. One of the most important things, too, that's critical for survival in this climate change thing that I want to touch on really briefly, for 2020 and beyond, for economic survival and beyond, for your personal survival, I suggest that you consider, I know security is number one priority, food and water is number one priority, but I would place, security first, and of course, praying in your faith, but I would place water ahead of food, because a clean water source during times where, a city, think about it now, most of these cities have waterworks, pipes underneath the ground that are 60, 70, 80 years old, okay? They have not been replaced. As the economy gets real bad and we go into this recession, like I said, in early 2021, once after the elections and everything, we could be experiencing water shortages here in America, okay? Because water, they can have a lot of water main breaks. The infrastructure is going to go down. Bridges, that includes bridges, any infrastructure is going to go downhill fast because it's not going to be serviced. There's no workers to service it. And, most of these companies are either outsource their work or they're trying to get robotic work and rely too much on computers to do most of the utility work. And now they instead of coming out to you, they just switch you off your utilities from the central office. They don't come out, and a lot of the meters are wireless, etc. Okay, and that's coming along with the 5G thing. So you want to have a source of clean water. Okay, if you are going to get some property, if you are going to this is not the time to be buying a new house or getting a new RV. And if you drive along any interstate, you'll see these RV parking lots are full in California, Florida, Texas, in the Northeast, in the Midwest, Elkhart, Indiana. So, the GDP is slowing, okay, and the global recession is slowing too as well. So don't be surprised if we see the stock market reach an all-time high next month, November, coming up at the end of next month. It probably will top out at 27,000, 28,000, an all-time high, because the Fed has juiced these markets up with a little rate stimulus, okay? But once that cools down, that's it. The patient is no longer going to be able to be revived. They're going to continue to try to inject as much money as they can in this economy, but it's just not going to be enough, okay? Business investment, equipment spending is expected to be down 4%, guys, okay? And that's in the U.S., which includes oil rigs, is expected to decline by 12.5% after dropping 11% in the second quarter, okay? So the only thing that we're basically manufacturing in the United States is two things: more debt and fast food. That's it. You look around, you see I don't know if you noticed that, but it used to be they were building a lot of dollar stores and a lot of payday loan stores, those kind of buildings, maybe like an Amscot or a payday loan, prime loan type of place. Now they're building this new fast food places in most of these towns and cities in America. And also occasionally you would see, like I said, new apartments or those townhomes, kind of condo like style things. That's what you see growing up, going on in most of these cities. And so that tells you that business investment is down, capital spending is down, because they can't afford, consumer is tapped out, And if you remember the last meeting that the Fed had, they were telling you about how the U.S. consumer is so strong, okay? How can the U.S. consumer be so strong when student loan and credit card debt is at an all-time high, surpassing $10 trillion, when the national debt is surpassing $23 trillion after next month, as we go into next month in December, okay? How can the U.S. consumer be strong when there's inflation in food costs and energy costs? Go to your local grocery store. Look at the price of bread. Look at the price of eggs. It's going up every single month, okay? The cost of housing. Most Americans cannot afford a $400 or $500 emergency, according to CNBC. 70% of Americans cannot afford a $500 emergency, either a car breakdown or a medical bill. So if the U.S. consumer is not that strong, and 2/3 of the U.S. economy is based on consumerism and debt, what does that tell you that's going to happen? As a matter of fact, an article just came out this Tuesday, CNBC.com. U.S. consumer confidence dips in October and misses expectations, okay? The Confidence Board's Consumer Confidence Index slipped to 125.9 this month from September's rating of 126.3. They had expected a 128 reading, and that did not happen. Well, look around you, okay? Consumer confidence is down because consumers are getting tapped out. There's no extra money to spend after bills are paid. They're even cutting back on vacations. 40% of Americans said they're not going to be taking holiday vacations this year, or they're staying close to home and just having something, a small family gathering with their kids and, taking their kids out and stuff like that, but they're not doing anything exorbitant. And this is across the board, bipartisan, this is Americans in general. So with consumer confidence waning this holiday season, don't expect retail numbers to be strong in this fourth quarter. Consumer cyclicals may do well, of course, like Walmart, because they carry everything and most people go there. Target, stuff like that, Macy's, they may do well. But anything other than that, this retail session with Apple and all that is going to be down, okay? Pending home sales are down 1.5%. No, I'm sorry, excuse me. They were down in August, but they were up a little bit, 1.5% in September. And that's thanks to the lower mortgage rates. Okay, so I guess that's a positive sign. But who wants to buy a home when they know when the housing market is scheduled to crash probably the summer of 2020. Okay, so this is not the time to be going out and rushing out and getting in a 30-year mortgage or a 15-year mortgage, because the home prices are overinflated. That bubble will be one of the first to pop, along with the credit card bubble. Those two bubbles right there are going to be the first to pop after this recessionary snowball gets started. This the deflationary recession and depression gets started. So this is not the time to be. That's why they're doing it. They're encouraging you to go out and borrow more money, and lower the rates down so they can get you trapped in all of these vicious debt cycles. Do not fall for it, because U.S. jobless claims rise this month as well in October. Okay, the number of Americans filing for unemployment benefits rose last week. Okay, it increased to 214,000 people. Okay, so that's a lot. It rose. Initial jobless claims rose by 4,000 to 214,000 people. Okay, and that's not counting the people that have given up for work. That's not counting the people who are working part-time or seasonal jobs that we got coming in. So that's why I say the numbers are skewed. Okay, because we all know people like school teachers, students, college students, whatever the case, they work seasonal jobs coming up for UPS, Uber, Instacart, grocery delivery, so that's going to be coming up later on this holiday season. You're going to see those numbers added in by the company ADP. But in any event, jobless claims are rising. We see inflationary goods, food prices, energy prices, rent prices, housing prices are going up. And this is in spite of a rate cut. Now, if these are the good times, you can just imagine what's going to happen in the bad times, okay? When things really slow down, and when government spending and everything goes slow down, and when the two things that are going to cause this thing really going to go down, like I said, is the debt, and the second thing is going to be an impact of the debt, not just on the U.S. consumer, but on U.S. businesses and on the government as well, as they cannot afford to make interest payments on their increasing debt. And that's what's going to cause the reset in this economy. They're just going to have to scrap it because everything has gotten too out of control. As a matter of fact, Moody's chief economist says there's an awfully high risk of a global recession in the next 12 to 18 months. And I've been saying that for the last couple of videos, that in 2021, the first quarter at the latest, after all the election stuff is simmered down, regardless of who's won and all of that, we are in for a wide ride, and this could last. Now, see, I want to tell you one more thing too. When I say that we're going into a recession, depression, and I say this is going to be long term, I'm talking about a 3 to 4 year to 5 year event. And like 2008 was just kind of like was a blip on the radar, this is going to be a longer duration event, but it's also going to be one that, like in 2008, the stock market crashed in one day and that was it, 1-2 days. This is going to be a slow draining of a poison of the swamp. Okay, this is going to be kind of like a gradual come down, so much so that the American standard of living is going to gradually decrease. It's going to be a slow, painful death rather than a sudden shock to the system. But there will be shocks in between, because I'm not, that's going to be the black swan events. Like I said, it could be a terrorism thing. It could be a thing over here where there's a currency crisis with other currencies and everybody flooding into the dollar, and then the dollar has a crisis. Or it could be another black swan event where we actually have a war going on in the midst of after we've gone into recession for so long, then every country's in a recession, and they say, well, look, we just have to take you guys to World War III because nobody's economy is growing, In that scenario there, then that would mean that China and Russia would team up with other countries in the region, Pakistan and Iran, and they would all team up against the U.S., UK, and other allies, and they're just being like that. But they stand more of a chance to win because they have a tremendous manufacturing base. They have less debt than the United States, and they have more people who are used to hard times. They're used to fighting for themselves. They're used to a lower standard of living for the most part. Okay, there are some rich billionaires in those countries and all that stuff, but for the most part, they're used to hard times. Over here in America, we're not used to hard times, and that's going to be the killer with this recession or depression. In the 1929, okay, as a matter of fact, this is the 90th anniversary. I don't know if you know this or not. You probably do. This is the 90th anniversary this week on October 29th. Today's the 31st. We just passed it, the 90th anniversary of the Great Depression. Doesn't that say something? Okay, and we've been in expansion for 11 years. So you do the math, okay? Back then, when our grandparents were living, okay, in the 1920s and 30s, they had a sense of community. That's what enabled them to survive this kind of Great Depression, okay? Not only that, that type of depression, they were already in a lower standard of living. Okay, nowadays most Americans, even if they are in the poor class or middle class or whatever, they have a higher standard of living than over 85% of the world. Okay, you know what I mean? In terms of what we have, resources, in terms of our houses, our cars, whatever. Not only material resources, but just physical resources. In terms of we're living longer and everything else. Okay, so this is going to make this a much more severe recession, depression type scenario, and it's going to be sad to see because we're going into a deflationary recession and then depression, okay, which basically going to be a stagflation after that, okay. There's going to be less money floating around, a liquidity problem, which we're seeing now. We're already seeing that happen now as cash slowly gets sucked out of these companies and out of the private equity markets and the private people, the super rich top ultra 1%. That's what's happening, okay. They're not going to tell you that on TV. You're not going to hear this on CNBC or Fox or ABC or BBC or any of these stations, okay. But in the US, that's what's happening, okay. The rich people, the super rich people, the ultra rich people who control America, policy and media and all that, they're taking the money out and they're waiting on the sidelines for this thing to, whenever they pull the plug, then that's when things are going to get haywire. And once it gets haywire, within the next 18 months or so, and it could be, it could be before then or after that, but we are thinking probably beginning of 2021 when things really look bad, because that means GDP will actually slow down to less than 1% for 2020, after 2020 respectively, and that also would have time for all of the corporate tax breaks and all of that the president gave, all of that to be bleeded out. And also, we'll be in a situation where we'll be, headed in the new administration, another term of the administration, whoever takes over from there. And so those are the continuing problems that we face. So I encourage you to continue to stack food, water, medicine, and supplies. I encourage you to think about telling your family to have some type of mitigation plan just in case you may lose power, have blackouts. You see what's going on in California with the fires. That could happen on a wide scale anywhere in America. So make sure you have a contingency plan. Make sure you're putting away some cash. Make sure you're putting away some resources, gold and silver, and also cash, and also physical supplies that you're going to need. Medicine, food, water, and most importantly, faith in God to help you through this time. And this is for all Americans, like I said, because we can see what's coming. We know that there's something wrong, that what they're telling us on the news and other channels is just, it's okay for now, but we know that everything has been held up by a thread, and we don't know what the future may hold, but we do know that it's coming down. What goes up must come down. That's a basic premise. That's mathematical. That can be proven. And so we have to prepare for a lower standard of living and for tough times and for lawlessness to go hand in hand, and morality to just go out the window as people get desperate. And you're going to see crime even in the best of neighborhoods. So it really doesn't matter where you live, but you need to be prepared to be able to deal with the issues. So that's where we're at now. We had the Fed rate cut. Like I said, some people are expecting another rate cut, and some economists are expecting another rate cut by the end of the year. If things don't pick up, we'll have to wait and see. But I'm pretty sure, I'm about 80% sure we're going to have another rate cut probably in December before the year is out to take us below 1.5% on the Fed funds rate. So be encouraged, stay encouraged. I'm here for you. If you have any questions or comments, please leave them in the comments below and I will answer them. And stay tuned for the next video. Okay, take care. You guys have a great weekend.